Good day, friends. In the subject of personal financial planning, one of the very important investment avenue is real estate investment. And in the lecture on real estate investment, in my previous lecture, I talked about what real estate means actually, residential property, commercial property, what are the advantages of investing in the real estate, what are the factors which affects the value of the real estate, and there are other issues regarding the real estate which affects the investment in the real estate. And we also talked about the regulatory body of the real estate sector, that is the RERA, Real Estate Regulatory Authority of India, right? Because earlier the problem in the investment of the real estate sector was that there was lack of transparency. People used to think that the builders, the developers will not fulfill their promise, and people were being duped. The small investors were being duped in the past by the real estate developers many a time, not always, I say, right? So that was the reason for that. That's why people were afraid of making investment in real estate, although it's a very favorite investment avenue for Indians traditionally. But with the advent of the financial investments, financial products that are available for investment, many people start investing more and more in the financial assets. But nevertheless, still in India, the real estate is one of the favorite investment avenue for the people, and this investment has given reasonably good return over a period of time. The reason being that land is limited and the population in India is increasing at a fast rate. So since the population is increasing, when I say rate means I mean in absolute terms, the number of people are increasing. So since the land is scarce, the limited, especially in the urban area, the cities, so the land is limited. And with the limited land, more and more people are shifting from the rural area to urban area. So the requirement of land increases, requirement of houses increases, requirement of offices increases, requirement of these commercial property increases. So is the price, because price of any asset or any product depends on simple demand and supply. So since the demand is increasing, so is the price of the real estate. But with the start of the RERA Act in India, there is a reasonable transparency in the investment. But when we talk of investment in the real estate, normally we have in our mind buying a plot, buying a shop, buying a office, buying a flat, right? Means physical real estate. But other than the physical estate, these days there are a lot of other ways in which you can invest in the real estate. Because when you buy the real estate in the physical form, the biggest problem in the country is the transparency, the price which you are paying for it, right? Because you are not very sure the price at which you are buying it, it is the real price in the market or not. Because supposing I want to buy a flat in a city like Mumbai or Delhi, somebody quotes me 2 crore rupees. The other person for the similar type of flat can quote me 2.10 lakh crore rupees, right? So the other person can quote me 1.90 lakh rupees, 1 crore 90 lakh rupees. So it means there is a lack of transparency, and the transaction cost involved in buying a physical asset, physical real estate, is quite heavy. So because of this reason, many a times people are scarce of investing in that real estate in the physical form. But for the good of the real estate sector, nowadays there are various other avenues by which people can participate directly and indirectly in the real estate sector in the country. So broadly, there are 3 ways in which you can invest in the real estate other than the buying a physical asset. One is invest in real estate investment trust, popularly known as REITs. So the second one is real estate mutual funds. You can buy the mutual fund. And third is shares of real estate companies. So I'll be talking each of these, right? So coming to the first REIT, because this is a relatively new product in this country. What is this real estate investment trust, which is known as REITs? I'm saying it's a relatively new concept in India. although in the developed country this has been the way of investment in the real sector for a very long period of time, but in India it is a recent phenomenon, I would say. So REIT is a company that either owns or finances real estate that produces income. Means a company is being formed and this company buys certain real estate properties or it finances some real estate property and this produces income. What it means by this is, as a layman, I would say that supposing a company XYZ company, this XYZ company will buy certain property, right? And this property they will lease out, they will give on rent, and that will generate an income in the form of rentals. This rental income that the company will earn, this will become the income of the company, which in turn will become the income of the investors who have invested in the REIT, which is called a REIT. Means each investor who is invested in the REIT is being issued units. So these units generate income by way of the rental income that the company will generate. Similarly, some developers want some finance, and these REITs company, they can invest, they can finance these developers. Suppose some company wants to want to develop some project, and for that project they require 1,000 crore rupees. So this REIT company will give 1,000 crore rupees or 200 crore rupees, 300 crore rupees, depending on the investment they want to make in that project, finance it, and they will get interest income on that, right? So in this way, this will become the income of the company, and which in turn become the income of the unit holders, that is REIT holders. So a company is being formed with the basic purpose of forming the company is the owning the real estate and which produces income. It enables an investor to invest in a profitable portfolio of income generating real estate assets by purchasing units of the REIT similar to the units of mutual funds. The way we invest in the mutual funds, what we do in the mutual fund, that we buy some certain units of the mutual funds. Some asset management company manages that mutual fund. It is being managed by the professional people, and individuals or the people who want to invest in the mutual fund, they buy the units of the mutual fund. Similarly, on a similar pattern, in the REIT also, a company is being formed and it allots units. Say in India now, each unit is of say 10 to 15,000. Earlier it was of 50,000 rupees. Now the SEBI has reduces it. So each unit is of 10 to 15,000 rupees. If I want to invest say simply 15,000 rupees, by making a simple 50,000 rupees investment, I can be part of this real estate investment, right? So I don't have 1.5 crore rupees to buy a flat, but I do have 15,000 rupees savings by which I want to invest in the real estate sector. So what I'll do is I'll buy simply one unit of REIT, and this company which has allotted these REITs, they will invest a large sum of money. The pool of money which they will collect from different investors, they will able to invest say for example, they are able to collect 100 crore, 200 crore, 500 crore, depending on the size of the investment or the collection they want to make. So if people give 1,000 crore rupees, this company in turn will invest 1,000 crore rupees in different projects which will generate income, and this income will become the income of the unit holders, right? So a small sum of by investing in a small sum of money, I can be a real estate investor. Any income generating by the underlying real estate asset is then distributed by the REIT to the unit holders. So whatever the income that will be generated by the company, that will be distributed among the unit holders. REIT are listed and traded on the stock markets, just like equity share. Normally, when we talk of the limitations of the investment in the real estate sector, we normally say that the real estate sector in India is less liquid because it takes time in selling the real estate, it takes time in selling a plot or a house or a shop or office, right? And the transaction cost is high. But if you invest in the real estate sector through REITs, these REITs are listed. REITs are nothing but units, and these units are listed in the stock exchanges, right? So anytime, any point of time when you want to sell it, that you can, these are listed, they are always traded in the stock market, you can sell it and you can get your money. So it increases the liquidity, right? So basic drawback or basic limitation of investment in the real estate is that there is a lack of liquidity. So this solves the problem of liquidity. This solves the problem of transparency. One of the reason of or the limitation of real estate, when say there is a transparency is less, the price is not very clear, right? So but in the real estate, on a real time basis, during the stock market time, the REITs are traded, right? So you know exactly what is the price of the REIT, and at that point, at that price, you can sell it. So therefore, a Demat account is mandatory for investing in REIT. Means through Demat, you can have as many units as you want, the amount you want to invest. At present, there are 3 REIT that allows investor to invest in India. Means, as I said earlier, these REITs are a recent phenomenon in this country, right? So not many companies have come. A few companies have REITs come up with REITs. One is Embassy Business Park REIT, the other is Mindspace Business Park REIT, and third is Brookfield India REIT, right? But it is becoming popular. It is becoming popular at a fast rate. So more and more people will invest in the real estate sector through REITs. So what is the eligibility of REITs? For a company to equity as REIT, qualify as REIT, the following criteria must be satisfied. The company must have an asset base of at least 500 crore rupees. See, the idea of having a reasonably large asset size is so that these companies can have a reasonable size of asset investment, and thereby they can invest in the projects which can give them income for a longer period of time, and they have the ability to invest in the large projects. So the asset base must be minimum of 500 crore rupees. 80% of the investment must be made in the properties that are capable of generating revenue, right? See, there are 2 types of properties. One is you are investing in a project which is just in the process, in the pipeline of building, right? So you are just buying, a company is buying a plot, a developer is buying a plot, then it will create building, construct the building, it will take 3, 4, 5 years, and then it will be leased out, it will be given on rent, and that will generate income. But the REIT companies are required to invest in those real estate projects that are able to generate income immediately. So that this company, when it invests in the real estate project, the income starts generating. So 80% of the total value of investment must be made in those properties which are capable of generating revenue. And 10% of the total investment must be made in the real estate under construction properties, right? So only 10% of your investment can be in the under construction property. Whatever income that is generated by these companies, 90% of the income should be distributed in the form of dividends, right? So company cannot keep on accumulating the income. 90% of the income that the company generate by way of rental income, by way of the interest which it gives in financing the different investment projects, right? All this income that is being generated by these REITs companies, right? They must be distributed to the unit holders. And in order to be more transparent, in order to be clear what the price of the unit is, net asset value, which popularly known as NAV, must be updated twice in every financial year, right? As I said just now, that there must be it is more liquid because the units are listed in the stock exchanges. So at any point of time, you can know at what price this unit can give. But other than that, what is the net asset value of this unit, of that investment REITs company, right? That should also be disclosed at least twice in a year, right? So that people know what is the value of their units. I am not interested in selling it, but still I should know what is the price of what is the value of my units. So NAV must be disclosed at least twice in a financial year. So now coming to the advantages part, why do people invest in the REITs? Why do people invest through REITs, rather I would say? So it is easier to invest in real estate using REITs compared to direct investment in real estate, because normally direct investment requires huge sum of money, firstly because it requires large investment, but in REITs, through REITs you can invest 10,000 rupees, 15,000 rupees, right? So a small, very small investment can be made through REITs. So this compared to direct investment is easier. REIT have lower liquidity risk, right? Because when you buy and sell the real estate, involve transaction costs, involves time, but when you buy REITs, right, there is low liquidity risk. Anytime you can sell it, anytime you can buy it. REITs investment are secure as regulated by SEBI, right? So these are transparent as they disclose the capital portfolio annually and semi-annually. We have just talked about this, that at least twice in a year the NAV must be disclosed by the REIT company. So there is a more transparency because there is a more disclosure by the company of their value of their portfolio. These offer relatively higher dividends. Because 90% of the income of the company should be distributed to the unit holders, so the dividend given by these companies is relatively high. Earlier the investment was rupees 50,000 with a lot size of 100 units. However, SEBI has brought down the minimum investment to 10 to 15,000 with a lot size of 1 unit. This was to increase the liquidity in the REITs space and also encourage more listings. Because 50,000 rupees a limit, and small, very small savers or small investors, if 1 unit values 50,000 rupees and in the market the price may be higher or price may be lower. So minimum investment of 50,000 was required if you want to buy some units, at least 100 units was a lot size. But now the SEBI has reduced it from 50,000 to 10 to 15,000. Company can do offer the units of 10 to 15,000 rupees, right? And a 1 unit of 10 to 15,000 rupees. So as small as 10,000 rupees can be invested in the real estate sector. The projected return on investment in REIT is anywhere between 8 to 14% in the short to medium term with a minimum of risk. It's only a projected figure. When we argue in favor of REITs, we say the return on investment on REITs, please don't compare it with the return of the real estate as such, physical real estate. It is only you are buying units, right, which is more transparent, which is more liquid, which is involve less transaction cost, right? So the return will be certainly little bit lower as compared to the invest in physical as real estate. But anyway, between 8% to 14% is the normal return which we have experienced when we invest through REITs, which is a reasonably good return. And as we say, one of the objective of making investment is not only to get good returns, but the rate of return must beat the inflation rate. And given the rate of inflation in the country, I would say 18 to 14% return is reasonably a good return. Now, after talking of REITs, another way of investing in the real estate is real estate mutual funds. That is, if you don't want to buy real estate in physical form, physical asset form, I said there are 3 ways. One is through REITs, the other is through real estate mutual funds. That what you can do is, there are very large number of asset management companies which do invest only in real estate, or which offers, rather I would say, in the real estate mutual funds. These are called thematic fund or sectoral funds. These schemes will invest in turn with only in the companies which are engaged in the real estate sector, right? I am not naming the company. There are a whole host of companies which are listed in the stock exchanges arena, right? And these companies, mutual funds, asset management companies do issues units, and the unit holders, or I would say the buyers, whatever the fund they will give to the asset management company, this fund will be utilized in buying the shares of real estate companies, right? So each unit, as we know in India, in the mutual fund industry, is of 10 rupees. So if I have 1 lakh rupees to invest, I'll buy 10,000 units if I'm buying in NFO, right, new fund offer. So I'll be investing 1 lakh rupees, and the asset management company in turn will invest in the companies which are engaged in the real estate business. So if the price of these real estate companies increases in the stock market, right, certainly the value of my unit in the mutual fund will increase. Thereby, I will be benefiting, right. So instead of making direct investment in the real estate, I am making indirect investment through the route of the mutual funds in the real estate sector, because I am buying a sectoral fund in which the fund manager will buy only the real estate companies which are engaged in the real estate business. So if real estate sector booms in the country, certainly there is a great likelihood that the income of these real estate companies will increase. The price of these real estate companies will go up in the stock market. Thereby, I will be making benefit by investment in the mutual fund units. So real estate funds are the sector funds, or we call it sectoral funds rather, that invest in securities of companies from the real estate sector. These funds provide the capital to the real estate company to develop a property. It is important to note that the investment requires a horizon of at least 3 to 5 years. Friends, whenever we talk of investment, especially the investment in assets, investment in the stock market, investment in the mutual funds, it is as a student of financial planning, as a financial planner, you should always suggest that when you are making investment in the mutual funds, either any mutual fund units, or here at this point of time we are talking of real estate mutual funds, the time horizon should be reasonably long period, because the stock market is quite fluctuating. It keeps on increasing and decreasing. The price of the stocks keeps on increasing and decreasing. But in the longer run, these companies gives good return. So when you are making investment in the real sector through mutual fund units, through real estate mutual funds, the investment horizon should be relatively long, which is, normally as a generalized rule, we say 3 to 5 years should be the investment horizon. Then only you can expect good returns in the real estate mutual funds. Now, after talking of REITs and the mutual fund real estate through mutual funds, just for academic purposes, what is the difference between REIT and the REITs and the real estate mutual funds, right? So REIT distribute a higher amount of dividend every year to shareholders of investors than real estate mutual funds, because as we talked earlier, 90% of the investments, the REIT is being distributed to the REIT holders. But in mutual fund, it is not a requirement. So REIT shareholders or REIT investors normally get higher dividend as compared to the shareholders of the mutual funds. Real estate mutual fund offers wider diversification than REIT based on the investment strategy, right? So mutual funds can invest in a whole host of companies. In the REIT, there is a particular company which invests in particular projects, which buy particular properties, and the income that property generates, that becomes the income of the REIT company. But here in the mutual funds, they have a quite liberty to buy and sell any company in the real estate sector. When they feel the prices are high of that company, real estate company, right, they can sell it. If they feel the price is low, the managers who are managing the real estate mutual fund, they feel the prices are low, they can buy it at such a time. So it gives more freedom to the mutual fund managers and the real mutual fund unit holders. So real estate mutual funds offer wider diversification than the REIT based on the investment strategy. The value of the real estate tends to increase during the times of inflation as property prices and rent goes up, thus giving a better return to the REIT investors, right? So this gives a better return. Shares of real estate companies. The other way of investing in the real estate is that one is through REITs, the other is through mutual funds, and third one is if you want to make a direct investment, right? You can buy, instead of buying physical assets, instead of buying physical real estate, you can invest in the real estate companies which are engaged in the real estate business. So if the value of the property of the real estate companies goes up, if the prices goes up in the market, so will be the price of your company in which you have invested, thereby making the investment. So instead of buying physical property, you can buy the share of real estate companies. See, mutual fund is an indirect form of investment. If you are buying real estate company, it's a direct investment in the real estate because you are buying directly from the stock market the companies which are engaged in the real estate business. So investors can buy shares of real estate companies directly from the stock exchanges. Investing in stock is easier than investing in the real estate in India and diversify the portfolio. Because of many times in this lecture and the previous lecture on the real estate planning, right, we talked that is lot of difficulties, transaction cost involved, transparency aspect is involved in the physical real estate. But in the real estate companies, means if you buy the shares, there is a clear-cut price every time on a real-time basis. You know what price the company is fetching, and you can buy and sell it at that very price, right? So it's easier to invest in the companies. Unlike real estate, stocks are liquid and are easily bought and sold, right? Just for economic interest purpose, DLF, Godrej Property, Omex, Shoba Developers, there are a whole host of companies in India which are engaged in the real estate sectors in this country. Finally, what are the limitations of investing in the real estate? I've talked about physical real estate. I've talked about 3 ways in which not physical real estate is being purchased, but you can buy the real estate in other forms, in form of REITs, in form of mutual funds, in form of buying the companies. But overall, what are the limitations of investing in real estate? Real estate is an extremely capital intensive investment. Selling a real estate takes time, especially when you are buying physical assets. These limitations are especially in context of the physical assets. Main drawback: project delays, high transaction cost, transparency, clear title, varied returns, etc. Right? These are the normal drawbacks, limitations we say in investing in the real estate. It is ideal for investors who have surplus funds and have no requirement for such funds for a long time. We normally say that if you are buying, especially the physical real estate, buy for the long run. Right? So it is ideal only for those investors who have lot of money at their disposal, plus they can invest the money for a longer period of time. So this is, friends, from my side about the investing in the real estate sector. Thank you.